emerging trends in banking means what is next, what will come in the banking sector in the upcoming years. The first, it started from 21st century. There are few which already started, but we have to go a long way. So the banking sector continues to evolve with the innovations. We are evolving day by day with the innovations coming into our lives. So specifically in banking sector, there are so many things which are happening. So with the technology and due to customer demand, because of the evolving technology as well as the customer is demanding, customer is expecting a lot of facilities from the banking sector. So if one bank is not going to keep up with the demands of the customers, they are going to fail in the market. So to keep up with the competition, they are evolving, the banks are evolving day by day. So what all they are doing? Of course, they are doing digital banking is working fine as we discussed. ATMs are there, but nowadays a lot of ATMs are shutting down because this withdrawal of cash is very limited. Online transactions through UPI. We know this term, UPI. UPI, Unified Payment Interface. UPI, we know there are so many: Google Pay, Phone Pay, Amazon Pay, Paytm, and many more are there in the market. So what these are doing, these UPIs and this digital banking and everything has evolved. Now India has the highest transactions in UPI in the whole world. Means if we see, we are hardly dependent on the physical cash. Now we are mainly inclined towards the digital cash, or we can say digital wallets. Yes, the digital wallets as well. Instead of keeping money in our pocket, we are keeping it in the digital wallets. Then neobanks. Neobanks are nothing else but the banks which are not physically present, with no physical branches. They are totally digital. They started online, they have the functioning online, and if you need ATM also, you can demand for it and they will send you a. So if you remember, Paytm Bank was there, which is now closed, right? So there were so many banks which are not physically present, but they are digitally present. These type of banks are known as what? Neo banks. Then next, sustainable banking. Sustainable banking means where, of course, we know that in banking a lot of paperwork happens, a lot of electricity consumption is happening. So to step forward towards sustainability, now banking also has started working towards it through focusing on green finance and ethical banking practices, where they focus more on the green side, means taking care of the environment. They take care of environment. So there are so many things, paperless transactions now in ATMs also. When you go and you withdraw the money, they ask, do you really need a receipt? So you are not asking for it a receipt. That means you are saving papers and you are helping a green banking develop. So sustainable banking is going to be the new limelight in the banking area. Then financial inclusion. Financial inclusion means including every possible person to the banking area to enjoy the banking services. So for this, the banks are doing a lot of things. Now, if we talk about UPI, now if you go to the ruralist of area and you want to buy something, you don't need to provide cash to them. You can simply scan the QR code and pay for it. That means the banking services are now successful reaching the ruralist area in the country. So, but we were discussing about the world, will come to the India just after this. So, let's start with the evolution of banking in India. Let's see that how banks have evolved in India from starting till future. Now, let's start understanding that how banking system has evolved in India. So, it all started with the ancient and medieval period, which was around 2000 BC onwards. So during that time, so it happened by merchants and money lenders, which we call as Mahajans, Sahukars, Sethis. All these people used to lend the money to people. So during that time, a official or a kind of bank was not present. So these money lenders, known as what? Mahajans, Sahukars, used to lend the money, but on a very high interest. They used to charge very high interest from the people. So temples acted as financial hubs. So during that time, when we know in the world also that the religious places were the main area where all these transactions used to happen. So the religious places in India, the temples, they acted as the financial hub. If someone has to transact something, they used to come to the temples and transact. So mainly during that time, barter system used to happen, and slowly it went to the coin system. And then the coin system led to these people. So these coin system and barter system used to happen in the area of temples. They were the main hubs. Then the barter facilitated the trade. As we have seen, the barter system means crop against some other agricultural product, whatever is the need of the other trader used to exchange. So this exchange used to take place. Okay. Then the hundi, a type of bill of exchange, came into existence. So hundi was a agreement. It was an agreement between traders to transact. After these many days, I'm going to return the money or I'm taking the money. So it came as an agreement which is known as hundi. Okay. So type of a bill where it's clearly written who has taken and whom to give. Particular agreement was given. Then come the colonial period. Okay. Colonial period started with the British rule. Okay. It started with the British era when British came into India. Now, when this happened, so it happened between 18th to 19th century. Okay. So modern banking in India began during the British colonial rule. But how it happened? Let's see that how this British colonial thing started in our country. So during this time, what happened? That the East India Company, they came to India. And what they used to do? They used to trade, or they came to India for cotton, spices, and other raw material. Okay. So they used to take these material and go back to their country and sell. Okay. Where they used to go? Their country. Okay. So East India Company came to India. They came to India for these things and they used to go and sell it in their own country. So they used to do a proper trade. They simply used to do what? They used to do trading. Okay. Buying things for India, selling it in their country. Now, then what happened? That when the East India Company, when they are taking goods and going to their country, they earned a lot of profit. But to gain more products, to gain more profit, they started asking the help of agencies. They started taking help of whom? Agencies. These agencies are not other than the Seths, the Mahajans, the Sahukars. Okay. These people acted as what? Acted as agencies. Now, these agencies, they used to do what? They bought the goods from the Indian merchants. Okay. But why East India Company has to take help of agencies? They took help from agencies. Why? Because there were few barriers in the market. These Britishers, they didn't know the language of our country to trade in, to bargain, to communicate, to to ask that what exactly they need. This was the language barrier was the first problem. Second problem, if you see the markets in India, these are very narrow and the products used to be used, and during that time no big machines, people used to carry it on their heads or helas and get the things. So it was very congested, plus the language barrier. So Britishers found it very difficult to trade in. They found it very difficult to find the exact goods they want from the market. That is why they asked agencies. Agencies were Indians. They knew all these problems and they exactly knew what to be done. So that is why the agencies started. So they got commission from East India Company to trade on behalf of them from Indian merchants and give it to East India Company. And because of this trading, what happened? They started earning more profits. They started earning what? More profits. Now, as the profits were going up, their desire to grow their business also went up. So, what happened? Now, they asked agencies to get more products, right? To get more products for the trading. Now, agencies, because the sales and sahukars were limited, they were not in huge number. So, what they did? Now, another person came into existence here. So, this another person was local trader. And local trader and the Indian merchants. Okay. Now agencies hired local traders. These local traders, what they used to do? These local traders used to reach out to even interior or the merchants who are at very remote place and get the products. So they used to get more products. Agencies are getting more products to give it to East India Company. So likewise, a chain of trading used to happen. So when this whole thing is happening, what happened? That now these local traders, they were asked to get more products. To get more products, they need more money, right? They need more money. To get more money, from where they will get? These are not rich people, right? Like sahukars. So they said we don't have money, right? So agencies, they started lending money to these local traders to trade more. Okay, they started lending money and they asked that we are going to charge you some interest. So now local traders were happy that we are getting money to pay upfront. They paid it to merchant, got the product, gave it to them. More the product they are trading in, more the profits are. So no issue in paying interest also. But then now local traders started booming. There are so many local traders started booming. To give everyone advance was not feasible for these agencies. So these agencies then started asking the general public. Okay, these are the general public. Who are these? These are general public. They started asking general public that you give us the money which you are keeping at your home, means your belongings, your money which you are keeping at home, give it to us, we'll keep it safe, on that we'll give you interest, means we'll give you interest if you're giving your money to us, and this money only they are giving to local traders. Local, they are charging interest from local traders, giving those interest to whom? These general public. So you see what's happening here? This is the whole banking system which established. So these agencies acted as what? Acted as bank. Okay, taking money from public, giving it to traders. Okay, charging more interest, giving them. Right. So here the concept of banking started in the British era in India. So let's go to here. So in 1770, the establishment of first bank, Bank of Hindustan happened. So before this, there was another bank, the Madras Bank has happened, but then later what happened? The Madras Bank merged into another bank. So that's why it was not recorded the first bank. The first bank in 1770 was the Bank of Hindustan, but eventually it also failed in the year 1832. So in 1806 to 1843, formation of three presidency banks happened. Okay, three presidency bank, Bank of Calcutta, Bank of Bombay and Bank of Madras. And slowly that the Madras Bank merged into the Bank of Madras and became one. So these presidency banks were started by the Britishers only. So these were not the Indian banks named on India, but it was regulated, started by the Britishers only. Even the Bank of Hindustan also started by the Britishers. Then the first joint stock bank started, the first bank which came as a company. Okay, as we know, the banking, I mean, all the banks used to come under Companies Act, right? So according to Companies Act 1860, the banks used to be a company. That is why as a joint stock banking, Allahabad Bank came into existence. Then 1861, the paper currency introduced in our Indian system. Okay. So this happened in the colonial period. Now let's move to the next, that is early 20th century. So early 20th century began focusing on both Indian businesses and individuals. So in 20th century, they focused not only people, they also focused on businesses and the individuals. So the merger of three presidency banks. What were the three presidency banks we have studied? Bank of Kolkata, Bank of Bombay and Bank of Madras. Those three banks merged, they came together to make the Imperial Bank of India. It was the biggest bank in India during that time, the Imperial Bank of India. So then what happened? Establishment of RBI happened as a central bank. Okay. The RBI came into existence. The RBI came into existence as a central bank to monitor all the banks in the country. Then expansion of banking services started to support industries, agriculture and trade. So the banking services are not only to safeguarding the deposits and lending loans, but they also started providing services. Services to whom? To industries, agriculture and trade, to facilitate trade, so that the India, because it's post our independence, the country was struggling to develop. During that time, the focus moved towards the industries, agriculture and trade.